Hey traders, welcome to Profiling to Profit, the week ahead in futures. It is December 4th, 2016. Hope everybody had a great trading week. We have turned the page on November and now the end is near. The end of the year is near, shall we say. And the big question now is, will we have the Santa Claus rally? Well, as traders, we typically don't look at that kind of stuff. We want to trade, of course, price, but it's always interesting to hear everybody talk about it, all the pundits and all that noise that's out there. But we do have to keep an eye on just a couple things. Like last week, we had our eye on the non-farm payroll that came out on Friday, which was really a flat market and was a non-event. That number keeps on becoming a non-event on a monthly basis, it seems. At one time, it used to be a real reliable number. Not real sure what's cooked into that deal. As we move forward, not this week, but the week after this coming week, it is the Fed's turn to, well, to decide, are we going to have an interest rate increase or not? We'll have to wait and see. So I suspect the market this week could be a little slow, maybe more sideways, or, you know, maybe they'll surprise us and try to jam the number or jam the market up higher into the announcement. But this week, guys, let's take a look at the outlook on the calendar here. We really don't have hardly anything on the calendar, just the normal EIA petroleum status report. Really nothing red, honestly, on the calendar. We do have a lot of Fed heads, but I'm going to ignore those guys because typically they just don't say anything. So over on the international side, we do have a couple interest rate decisions out of Australia. So if you're an Aussie dollar trader, that's stuff you want to keep an eye on. And then, of course, out of Europe, we'd have the ECB has an interest rate decision, and that is on Thursday of this week. So keep an eye on that. There's a couple other little red news events out, but just again, if those are mostly if you're going to be trading currencies out of those countries, you have to definitely keep an eye on that. Let's get over to the charts for this week. We had some interesting things happen last week. While most of the market went sideways, the NASDAQ did not. It sold off pretty heavily. As you can see here, this is the week. Again, this is a weekly profile with 2-hour candles. This composite over here is over more than a month long. So we're back into the range here. We can see we've, you know, gosh, since September, actually August, we've been going sideways here, just back and forth, up and down. Highs of 49.11. They came within almost 12 points of that. This last week we opened and had a little rally up and then sold off hard back into the range. At this point, we blew through this zone right here. We tried to get long into this zone, but it was a quick stop. There was just nothing in there for us. So that zone is gone now. Right now we're in the middle of the range. We will watch this number down at 4650 area. It's not a number we're going to trade off of, but we'll watch it. If we break, then we're looking for the zone below, which has been here for a while, that 4578 to 4545 number. We would look maybe for that as the pullback, and then maybe the rally into the end of the year could happen at that point. But it's a wait and see still on the NASDAQ. With the ES, it's a little different. As you saw, the NASDAQ sold off really quite heavily. The ES pretty much went sideways. We didn't even break. We poked out above last week's high, came back into it, tried to test the prior week's low, but we couldn't take it out. So maybe in the Globex session this week we'll take it out, and then probably a little bit more sideways into that Fed meeting in about a week and a half. Now we are looking at this zone down here, the zone below. We've been watching it for a while, 2164 down to 2150. That's a zone we like to, if the market's going to hold up, it would hold up down this area, and then maybe a retest to that 2213 area. Into the end of the year. And you know what, the Russell is acting just like the ES right now. Almost you probably, if we hid the name, you would look just like it, other than this weekly candle here where we had a monster rally. We did sell off a little bit last week in the Russell. We did take out the previous week's lows, but just by a couple ticks. We're watching the zone down here at the 1280 to 1260 again to get long and take out the 1348. we like this opportunity. Now, if it gets down below these zones that we set on the Russell as well as the ES, then we could get further sell-off at that point. But we'll watch these zones until then. Now, the big story last week was crude oil. Crude, obviously OPEC had their meeting last week, and running up to the meeting we had a lot of different spikes. We had some sell-offs, and of course these were all news related rumors and stuff, and we said, listen, we're staying on the sidelines, and there was a reason that we did, because we didn't want to get caught up in all the spikes and have a position go way against us and then really get squeezed on the deal. That's how people get hurt, and we look for risk zones for that. So what we saw was we gapped down earlier in the week, and then of course after the news came out, it was a monster move. So last week's range, if you look at it, not only did we engulf the previous week's action, but we went from 44.88 up to 51, actually almost 88 to the tick. So we had a phenomenal, almost 8-point move on this thing. That's pretty solid. Is that right? I just want to make sure. 44, so 88 up into that 51.88. Yeah, that's a huge move. Now, it consolidated at the end of the week up here at the top, which suggests that, hey, we probably have more upside. We were expecting, if it did move up and OPEC did slam the deal down on the table, which they did, then 52.22 would be on the table. The ultimate target is 60 on this. They're definitely going to want to go to 60 if they continue this thing out. That's a big magnet. And I also want to look at another level up here. Like I said, we were looking, there's a gap up here at 56, 80 some. That's going to be a target, and of course 60 is definitely going to be a target as well. So now we have established a zone in this. We like this zone. We think this is a good opportunity, as long as crude decides it wants to pull back just a little bit for us to cooperate. We have a zone right now, 48.80 up here, down into that 48 range. We feel that's pretty solid zone to get long into. Again, if it busts down below, then we may come down and test this range that we've been bouncing in and out of now for a while. I would love for this thing to come back down, establish this thing, take some off at 52, take some off at 56, and hold the rest for the 60 trade. So gets in the zone, be sure to use a trigger. Don't be trying to step in front of a freight train, because crude can be a freight train if you're not careful. All right, let's go over to gold. Gold, well, Gold has been a beautiful trade if you've been short in this thing. We were hoping for a zone to establish a position to get short. That zone never happened. It touched it, so this zone is gone right now. And what we're going to do is we're now going to look at a zone below this. The targets we originally outlined at 1207 and then down into 1155. 1155, 1154 is getting ready to get hit. 1207 obviously was blown through. So when gold gets rolling, guys, it's an opportunity to really hang on for a long ride. Listen, and gold's one of those great products that if it's not going to go, it'll let you know pretty quickly. It's not gonna hang around and then all of a sudden jump and stop you out. If you're wrong, you're going to be wrong pretty quickly. However, when you're right, you can hang on for a while, because you can see this thing just keep one time frames down. And we're talking about a weekly time frame here, but it just keeps going down and going down. We did get some bounce down here. We didn't quite hit the zone or that target of 1154. We think that it could roll over, get down into the zone. We have a zone 1154 to 1142. That is a zone we would want to buy that from. Okay, we're expecting a little bounce in here. The dollar looks like it's starting to roll over and maybe want a little bit of a pullback. We suspect that if that's the case, gold will make a little bounce. So we want to take part in that, and if that's the case, we're just going to use a reversed here. We're going to use a target up at 1186, and again a target at 1208, and then we may trail some up and see how high it gets. I don't think this is a total reversal. I think gold has more downside, but I think we're a little extended here in the tooth, and there's about time for a little bounce, and this zone is very solid down here. So watch that zone. Again, use triggers if you're getting in. All right. Let's go over to the euro. Euro is just like the gold. However, euro had a bigger bounce and broke the prior week's high and closed above that. That's pretty bullish. We have a zone up here that we're watching still from that. Well, let's just put it this way. We want this zone in here from 107.03 up into that 107.55 area. If we're able to get in there and get short, which there's a couple things in this zone that's going to help us possibly, we are looking for this to roll over and take out the 2015 lows of 104.63. Let's go take a look at that. So if we're able to get short into this, then we're looking for these lows at 104.63 to get taken out. That would be our target. Well, actually just below that, because there's probably some stops still tied up down here, and if they run this, they may run those stops, and I guess we'll just have to see how many stops are down there and if they really blow them out on that. But that would be the zone. That's a great trade if we can get it. Crude is, excuse me, the euro is like gold. When it gets going, it can just continue on, and it doesn't like to pull back too often. However, here's a chance right here. We've had a little sideways to up action. I'd like to see maybe another sideways to up into our zone to allow us to get short in here. So watch that one as well. Alrighty. The notes. Alrighty, so here's what happened in the notes. The notes actually blew through our zone and didn't even trigger us. It was sort of disappointing because we thought for sure there was going to be a great opportunity. So we had a zone, and that zone actually was, the bottom of the zone was down here where price is right now. The upper part of the zone was a little bit higher at that 125 area, and it blew through the zone and then bounced back up to the zone. Now what we're looking for is if we can get a little bit more selling here back into a new zone which we've identified, which is 123.25 down to that 122.95 area. If we can get that, get some movement down into here, we like the opportunity for a bounce in here. If this bounces, we would look for 126 area and then 127 area for targets in here. So we like the risk reward. We think this is a great opportunity for the bonds to bounce a little. Long term, we think the bonds are the notes and the bonds are in trouble. And I keep on saying bonds, but it goes for notes too. We think they're in trouble long term, but right now we're looking for smaller bounces. The risk reward is setting up for this. So we have identified it. The bonds are in the same situation. However, they acted just a little different. They actually blew through the zone as well. As you see here, I had the zone outline, and then they rolled back into the zone. As far as this is concerned, we're taking the zone off and we're not going to establish a new one. We couldn't find enough evidence that this was going to move back down below that 148. And if it does, then there's a chance that you could buy it down below. We don't have the zone identified. However, if you are going to do it, be sure you make sure you control your risk. Obviously, the target's going to be up in this area from 153.16 to 154.22, and then above that, we could probably go up in the 156.25 is pretty safe. Again, bonds and notes we believe is in trouble long term. Again, it's just a belief. You can't really trade off of that, but we will keep anything that we go to the long side, especially after this sell-off. We will keep the long side fairly tight. Stops will be a little bit tighter. We'll manage it a little bit closer. We just don't want to lose profits. It's unnecessary. We're not trying to be heroes here. Listen, you don't have to trade both ways. If just the short side makes you nervous, then just ignore it until we get a long side trade. If you can go both ways, that's fine. Just understand that when there's bounces in a market that's very weak, like as it is here. Let's take a look at this. Let's go to the daily profile. So you can see here bonds as well as notes are very weak in here. So any type of opportunity you take to the long side, you just have to understand it could be short-lived. And you can't get crazy, and you can't be keeping super wide stops, or you could obviously hurt yourself and your P&L on that. So be very, very cautious when you're taking what they would call counter trend trades on the deal. They can be profitable, but they also can be very painful too. Alrighty, let's move over lastly to the corn and the beans. Corns did pop. They gapped up this last week and then sold off. We figured they would try to follow the beans because the beans were rallying a little bit. We have the number up here at this $3.63 area, and obviously it did not hit that. We thought there was a good chance here, but when it gapped up, there's just no way to chase this. So we sat on the sidelines. We're still on the sidelines. This has fell back into the range. Of course, look where it closed. Again, I want everybody that always wonders about people with numbers and all this kind of stuff. I want you to go back and look at this. This thing closed at 347.17. The line in the sand now, since back in July, for us has been $3.46.37. So you go back and look at how many times this has tested it, has been support resistance, and of course now it is still sitting on it, closed at that number. It's not to the exact tick, but when it closed within pennies of that number, it's a significant number, and it still is. But right now we're right in the middle of the chop. There's nothing for us to do. There's no edge. There's no risk areas that are worth looking at. So we're going to sit on the sidelines with corn. And then, of course, soybeans, they did have a nice move. They did go ahead and test that line in the sand for them at $10.56. However, they did sell off, and they're not quite back into the range. And yeah, we could probably look to maybe get long into this. But at this point, we're going to stay on the sidelines. I think it's a little unpredictable still. We have another USDA report coming up, and it just isn't worth trying to establish a position in here because I don't believe the overall consensus is yes, we're going one way or the other. I still think we chop around in here for a while. We may get some nice moves, and the intraday guys may make some good money, and there may even be a few intraday opportunities, but that's not for this video. But anyway, we're going to sit on the sidelines with soybeans, and then for that we'll head back to NASDAQ. And like I said, we always use NASDAQ just as an FYI because that's sort of the go-to market for us. It's in the range. We're sitting on the sidelines. However, the rest of the indexes, as we said, is probably showing us that they want some more upside. But for that, guys, we hope you guys have a great week. Just to let you know too, we just posted the webinar from last week, which was using the profile to trade stocks. You got to take a look at this. This is a great video. Josh did a great job on this. Take a look at this. Watch it. It's free. If you're having some issues or need some good education, Market Profile Trading Academy, go on over, go to the free resources. First of all, sign up for the Trading Success book, The 7 Secrets of Trading Success. It's free. Just drop us your email. We'll shoot it over to you. Go over to the free resources up at the top right. Scroll down to the bottom right of the page. We have a load of videos. We have market profile examples. We have loads of stuff in here, guys, to help you out. We hope you take advantage of it. It's all free for you. All we ask is just go to the website and start looking around. We want you to be successful, and to do so, you're going to have to make sure you understand how to use profile in your trading, and then also get it inside your trading plan. So with that, guys, have a great week. Watch the zones, use triggers, and we hope everybody has a profitable week too.